Ladies and gentlemen, welcome back to the channel. I would like to take some time to talk about the MOASS. Is it coming? Is it not coming? Have we wasted our time? Yes or no? Bottom line this. So that's what we're going to get into here in this video. We have a clip from Tom Lee as well that I think you guys should hear, because a big story of this market is there's no liquidity in our markets. There's no capital buying stocks. Hedge funds, institutions, they have been selling stocks for a long time now. For the last 18 months, really in this last year, things have accelerated. Without market makers, stocks would be way, way lower than where they are today. Now, Tom Lee thinks we're heading into the second year of a bull run, and liquidity might actually come into our markets. Now, when liquidity was in our markets, Tesla stock did some interesting things. We're going to go over that here in this video and what could be to come in 2024. So let's get into it. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Now, first things first, I want to say for people that are like, hey, the estimated short interest off your flow is 7.5%. BS. No, it's not. No way. No, I will not accept that. Okay. Now, there's a lot of ways you can hide short interest, right? There is a lot of lack of reporting that goes on. There's a lack of oversight that goes on in regards to AMC positions. If you don't want to report your position, you really don't have to. If you want to make it look like you covered on a short position, well, you can obviously do that, right? There's a lot of different ways to do that. It's very easy. It's very well known that this happens, and it has been happening. Now, liquidity is very interesting because market makers, their job is to provide liquidity, but they don't necessarily push stocks higher or lower. They just kind of will keep stocks where they are. It's the actual liquidity, buying or selling, that really drives stocks. So what you have seen in the markets overall, your 7 biggest stocks, your 10 biggest stocks have done well. They have been the only thing that has driven markets higher. If you look at IWM, if you look at small caps, if you look at super small cap stocks, you are utterly destroyed. Okay, AMC falls in that category. There is no appetite for risk. There is no appetite for buying stocks in general. AMC is on the worst side of this situation. Now, when there was liquidity, when there was an appetite to buy stocks, what happened with AMC stock? AMC stock went through vicious rallies, many rallies, many rallies, even in 2022, in, the March, even in August of 2022, you went through rallies. There was way more liquidity then than there is now, because there's a saying called Tina, there is no other alternative. Well, now there is. Now investors are putting their money into money market funds that are giving them, 5% on a monthly basis or yearly basis based on treasuries, right? Treasury yields have risen so much, there is no appetite to buy stocks. And there really hasn't been for a while. Ever since those treasuries got above like 3.5%, there has been no appetite for risk at all. Now, big players in these rallies were hedge funds, institutions, not just the guys that were getting squeezed, right? That were forced to buy back their positions, but also the guys that, were betting on this as well. Now, the way I see AMC stock right now and the markets, sure, there's near-term problems. We're going to likely get more downside in our markets. But at this point, the risk to return or risk to reward looks so favorable for AMC stock right now, especially considering AMC stock is not, fundamentally speaking, a business in disarray. The business itself is getting better, reporting better earnings, coming up with new, licensing brand deals, I guess you could call it, with some of the Taylor Swift, Beyonce movies. It's only a matter of time before you go through a big rally. Now, question is, where's the short interest? I don't know. It's not 7%. Is it 20? Is it 30? Is it 40? Is it 50? I don't know. How many married puts are out there? I don't know. How many synthetic shorts are out there, which is basically like the same as a married put? I don't know. How many naked shorts are out there? I don't know. We don't know that until we know that. And right now we don't know that. Okay? So, but it's pretty safe to say there's a lot of that. A lot of that activity, right? Just given what's happened with the stock price over the last, year, 2 years or so. And a lot of it has to do with, again, lack of liquidity. Now AMC is very special in regards to the publicity, in regards to the just notoriety of AMC. When AMC stock rallies, everyone listens, everyone pays attention. When liquidity does come into our markets, you could see a broader market rally, and you could see AMC stock well outpace that, and that could give you, this big bounce back, a MOASS, if you will. We'll have to wait and see. Obviously, we cannot forecast the future. The near term looks very uncertain, looks pretty rough. But when that liquidity does come back is when you see a much larger rally in AMC stock. And hopefully at that time, probably in the beginning of 2024, the first half of 2024, if not the second half of 2024, is just conservatively what I would imagine. Obviously, the Fed could cut rates, all of that sooner, but that's when I would reasonably expect liquidity to come back into our markets for AMC stock to be charged. Right now, AMC has the ignition. The ignition's just fine. It's working perfectly, but there's been a hole in the fuel tank for a long time. Okay, and the fuel tank's just been dripping, right? But there's been a hole, so it's just been there's no fuel for any kind of rally here. There's no liquidity. There's no dollar halas that want appetite to buy any stocks right now. There's just not. That's simple. You could look at very high quality companies with very little debt that are doing just fine, that are terrible. I mean, look at a Dollar General. It's down 50+% this year. If a Dollar General can't do well, I wouldn't expect AMC to do well. I wouldn't expect to get a massive short squeeze in AMC. Now, I still do think there could be a multi-100% rally coming in the next, coming days or weeks, maybe a month or two. That's not the MOASS in which I'm talking about, new potential highs. I think you get that when liquidity comes back into the stock, or really the markets. Now, how does liquidity come back into the markets? Well, number one, the Fed cutting rates is a good place to start. But also, it could have to do with just cash coming off the sidelines back into stocks as maybe the economic outlook looks more certain. The markets hate bad news, but they hate uncertainty more than they hate bad news. So as we have uncertainty around a potential recession, the Fed's response, how long or how high for how long the Fed's going to keep interest rates, all of that is uncertain. All of that makes investors, big money, want to stay away from stocks. And we've seen massive outflows to stocks for a long time. I think the Fed cutting rates is a good start. I think a better picture on the economic outlook is a good start to getting liquidity back into our markets. You guys got to remember, there's more money out there than ever before. Okay, there's more wealth out there than ever before. Believe it or not, might not sound like that, but the wealth is not in stocks right now. It's just not. So Tom Lee thinks we're going to have a second year of this bull market. And I think what he says makes a lot of sense. So we're going to go ahead and play this clip, and then we'll be back shortly after to go over it.
How do you think about going into a second year of the bull market? And what are some of the things that we should keep an eye on to feel confident that it's continuing?
If I was to sort of think of it as how a skeptical investor is going to look at next year, I think there's so many things that flip from negative to positive. The first is really the trajectory of inflation. I mean, we've seen a huge drop in inflation in the past year, and yet when we talk to those skeptical, they're like, well, hey, the drop from 10 to 3.5 was easy, but going from 3.5 to under 3 is going to be really hard work. So inflation's sticky.
Yeah.
I don't know. That's just someone's opinion. We'll see. We've done a lot of work on inflation. I mean, 2/3 of inflation is essentially housing and cars, and I sure don't think those are sticky. So I think next year that flips positive. And the second is what the Fed will do. And there's two parts to that, because we know Fed has two tools they're using. One is actual rates, and I think they're going to be, I think the highest probability is that they've already finished hiking. And next year that could be cuts if inflation tracks the way we think. But the second part is there's a lot of people that think it's now the word of the Almighty that interest rates are higher for longer because the Fed has deemed it so. As you know, that's a communication tool. That's Fed's imagination of where rates need to be. I think next year
they'll change. They could change their mind.
exactly. Yet so many people take it set in stone, and that could be a huge surprise. I think rates. Mark Newton thinks you could even be in the 3.5-ish next year on the 10-year yield, and that would be PE expanding.
Wow.
Yeah, and then other things that are positive next year is Europe is what broke, and China is what broke from monetary policy hikes, and they could be coming out of this as well. And on the geopolitical side, I don't know what's going to happen, but it doesn't have to be widening and worsening next year. That's a little bit unknown. And then fourth is investors, if the first three things happen, they're going to move money back into equity. So I think Ari's point is correct. Next year should be even stronger than this year for those reasons.
All right, so getting back to the idea that this has not exactly been a rip-roaring bull market, which again, we didn't even mention the regional bank disaster, which impacted the market for a whole 10 days, if that. So a couple of charts from Urian Timmer. This was he tweeted this at the end of September. If stocks entered a new bull market last October, you never know it by looking at the small caps. In fact, this would be the weakest small cap start ever for a new bull, which is not good considering that small caps normally outperform on the way up. And then he also shows the S&P 500. The black line is the rally to date. The blue line is the average. How do you think about something like this?
Well, I think it's there's two ways to think of, because the chart is correct. One is to say that, well, if it's not a sample, like so small caps aren't doing well, then this isn't a bull market. But I think the other way to view this is, well, small caps are really only benefiting if there are actually people buying stocks. So I think that their weak bounce is consistent with the idea that this has been a really liquidity-starved bull market. Michael, I don't remember all the specifics of 2009, but I do know when I was at JP Morgan, I think for the first 2 years, people had given me many reasons to argue why that wasn't even the start of a bull market, that it was all a head fake. And it's very similar. People would have different charts about how, like, oh, well, EM isn't doing this, or, hey, your leadership is coming from the wrong groups, or, hey, why are flows doing what they're doing? And I think in each case, people were arguing why the move from 2009 all the way through 2011 was actually not really a bull market. It really wasn't until maybe 2012 that people acknowledged that the bottom, in fact, was in.
And then two points on that. You mentioned the potential head fake. I remember, I think it was the fall of last year, there had never been a bear market rally that retraces 50% of the previous loss and then went on to make new lows. I think Ryan Dietrich was tweeting that, Urian Timmer, a lot of people were talking about that, and nobody believed that October 2022 was the bottom. Josh and I were in a room full of people. Raise your hand if you think a recession is coming. Every hand went up. Raise your hand if you think October was the bottom. No hands went up. Nobody believed that rally was anything other than a bear in disguise. And so even though we haven't gotten the outperformance that you've seen from small caps historically, well, it makes sense. These are the companies that are most sensitive to interest rate hikes. The S&P, 90% of the debt is long-term fixed. These companies have a lot of debt that's maturing over the next 1, 2, 3 years. So it does make sense that they're not outperforming to the way that they did in the past. One thing I want to mention, which I think is pretty interesting in terms of the current market environment, in terms of small caps perhaps behaving the way that you would expect, given where interest rates are, and Tom, as you mentioned, given the fact that equities have had persistent outflows. If you look at the ARK Innovation ETF, which is a proxy for Goldman Sachs Unprofitable Tech Index, if you look at that divided by the Qs, that actually hit a new cycle low today, which is pretty remarkable considering the beating that's already taken.
Yeah, I mean, it's that chart sort of speaks to, I'm looking at it now, I mean, it kind of speaks to me of many things. One is it shows you investors aren't embracing innovation either. Speculative growth or speculative ideas. Crypto kind of falls in that same category as well. But, it has been a narrow market. I mean, it's kind of hard not to acknowledge that, but The things that have outperformed to me have been logical leaders too. So I don't know if I would say in 12 months the ARK fund won't find a bid, but I think in this, environment of caution by companies and consumers and businesses, it to me it's understandable why it's been a narrow market.
So what Tom Lee said is basically the stocks that have been outperforming are the stocks you would expect to outperform. The stocks that are self-financed, that are growing at least to some extent, or at least not, seeing bad growth. But really stocks that are self-financed. Your safety trade within the markets. That's why a lot of your other stocks have not done well. There hasn't been liquidity. Short squeeze what? There's just no liquidity. Okay. He does think more liquidity is going to come back into our markets in 2024. And I do think that is, something that we should all welcome and look forward to. And I think that's when you potentially get that big rise in AMC. Again, a multi-100% rally, $20, $30, $40 per share. I'm expecting that just on a bounce back within the next couple of weeks, next month or two or so, right? Obviously, we can't pinpoint exactly when, but I'm expecting that at some point. Just that big kind of MOASS event. You need liquidity for that. You need people to have an appetite to buy stocks, especially if you're buying AMC right now. I mean, the risk reward is just stellar. I mean, what? You go back to $7 per share, cool. You lose $2 per share. You could rally to 18, 20, 30, 40, 50, higher than that down the line. The risk reward looks really, really good. Even Eric Handler just raised his price target, to $5 from where it was at 50 cents. Even analysts, your bearish analysts, are starting to get more bullish on AMC. Just imagine when that liquidity comes in. So yes, I still do think the MOASS is coming, but maybe not in the timeline that a lot of people would like to see. It's all about liquidity. And I don't know when that will come back into the markets. Has to do with the Fed, has to do with confidence in the economy or the economic outlook. I don't know when that is. Let me know down below in the comment section when you think that is going to be. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a fantastic rest of your weekends, and I will see you in the next one.